the economy's in deflation.
Yeah.
Perhaps one of the constraints, and a number of the Western banks would actually argue that the level of debt, and one of the reasons why they haven't done this so far, is that public sector debt, if you include the LGFEs, is over 100% of GDP now. So arguably China's already hit a fiscal constraint. There's no real constraint really on the level of borrowing, but it's in terms of the efficiency and its ability to impact. Credit's inflationary when taken on and deflationary when paid back. So in order to keep growth momentum going, and it has to come from fiscal, because there is effectively, China's in a form of a liquidity trap. It has to be fiscal. Therefore, it has to be meaningful as well.
So, given what we know about monetary and fiscal stimulus at this point in the narrative, is this a green light, Nick, to add to Chinese equities? When so many have been underweight, and because of this, China is uninvestable narrative.
And how are you positioning?
Yeah, that's the more important question, isn't it? It's a more important question for your viewers as well. Currently, our net exposure is 35% in equities, long. We focus on Asia Pacific, so we definitely have some China exposure there. The way we prefer to get the exposure is through the big platform stocks. I think another important aspect of the fiscal policy this time around, it hasn't been articulated or outlined completely yet, but there will be a shift to consumption. So I think you probably want to prefer the big consumption-related stocks, the big platform stocks. Another reason we like them is that they're net cash on balance sheet. So you're taking on balance sheet strength as opposed to trying to buy the dip in real estate, which are distressed companies. So we prefer Baba Tencent, Baidu, JD.com.
And they're really cheap,
They
right?
are.
I mean, Baba, last I checked, was it at about, 10 times?
Yes, yeah, absolutely. It certainly rallied off the low, clearly. But from a valuation standpoint, there's still a lot of room. Also, their net profit margins are still very, very large. Tencent is about 50%. It's still a very profitable company.